Stop overpaying on your home loan. We understand that managing your finances can be overwhelming, especially as interest rates continue to rise. With access to 70 plus lenders, our team of specialised brokers will find the best rates for your specific needs. Count on us to secure a lower rate swiftly, giving you the confidence you deserve. Book an appointment with one of our experts today to protect your financial well-being and secure your future. Call us now at 02 8866 2444 or visit our website at finni.com.au.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, how you going? Phil Tarrant. I'm the host of the Smart Property Investment Show. I hope you're well, cracking through property in what is, I'd like to think a market which has some stability now for borrowers. Absolutely. We haven't had interest rate rise for a little while, and the mail coming through is that we're most likely at terminal interest rates. A number of economists are still forecasting potentially one more rate rise. However, there's already a lot of talk and scuttlebutt around the edges that I'm hearing of when a rate's going to start falling. So this is the topic on everyone's lips at the moment. At every single dinner party I go to, everyone's talking about interest rates and what's going to happen. But it's been nice to have some sense of stability over the last few months in relation to repayments. I mean, I think a lot of people now have absorbed those increased repayments, even though there is and has been some challenges. But I saw some numbers the other day that a lot of Aussies are still quite ahead on their mortgages. So I think Australians today versus what they were maybe pre-global financial crisis, a lot more responsible for their money, and they're taking responsibility for those things rather than blaming someone else should they not be able to make their repayments or take on too much loan. So I think that education has been continuing over that period of time since the GFC. We talk about home loans and mortgages a lot on the Smart Property Investment Show. And one of the reasons why is that property investment is a game of finance, your ability to access finance, your ability to repay debt, your ability to service debt and look to increase your serviceability so that you can keep the perpetual sort of cycle of investing in property, and that's how you build a large portfolio. Again, we chat about that on the Smart Property Investment Show, but it comes back to the mortgages. So every couple of times a month, we get together with our friends over at Finni Mortgages, that's finni.com.au, to have a discussion around mortgages and what's happening. The big dominant discussion that's been happening and taking place over the last 18 months has been around interest rate rises and how you can ensure that you've got the right mortgage for your needs. That sort of discussion is now pivoted to, for those people who are looking to capitalise on the market, try and extract some of their equity in their properties to leverage to potentially buy more assets, and a lot of buyers agents and economists I'm talking to and hearing from are obviously saying that there's some good buying in this market in the right place. That doesn't necessarily mean all markets are good. They're all moving in different cycles, but we were at a property peak some 2 years ago, a year and a half ago. It's come back and it's on the way back up towards that. So everyone's on for the ride, but you've got to get your mortgages right. But you may be tapped out, or you may be looking to enter the market and you're wondering, are you going to stump up a deposit to purchase that first or that next investment property? And there are ways in which you can actually do that. Traditionally, you need 80% borrowing or 20% of the purchase price by way of a deposit. That's what banks require. They'll take on 80% of the debt. They'll get you to put 20% in and hopefully over time pay it off. But there are ways that you can borrow at higher LVR levels, and there's a lot of policies suited to particular professions or particular buyers, depending where they are in a cycle. There's a lot of incentives around or going around at the moment for first-home buyers. But a lot of professionals can still benefit from borrowing at higher LVR levels, which can either get them into the market sooner or with less cash. Banks, for some reason, like certain professions, accountants, medical professionals, lawyers, a lot of them get beneficial pricing or beneficial policy from lenders, and enables them to borrow at higher LVR levels. But that applies to everyone as well. So you can borrow at higher LVR levels. Often you'll need LMI, which lenders mortgage insurance, but there's some other ways around it as well. I want to concentrate on that today to get a bit of a sense about borrowing at higher LVR levels. Joining me in the studio, Sharon Z. She's a broker from Finni Mortgages, finni.com.au, and we're going to pull it apart. She's done a lot of this in the past. Sharon, how are you going? You well?
Very well. Thank you for having me, Phil.
Is this the first time on a podcast for you, Sharon?
Indeed, it is.
Yeah.
Since I'm being nervous.
Well, you shouldn't be nervous. And what I'm going to do for all our listeners out there, Sharon's given me a lot of information, very thorough, methodical person, and she's put together a really good Q&A for me around a lender's mortgage insurance, mainly around waivers for medical professionals. And that includes sort of people that work in and around the medical profession, including nurses. There's some measures around it. So I'm going to publish on smartpropertyinvestment.com. You go and search it, just Google Smart Property Investment LMI for medical professionals, and we'll put a lot more information, but it's so relevant, it spans out to other professions as well. Sharon, let's start with the basics. What is higher LVR borrowing or buying properties with a higher LVR?
100%. As you already mentioned, lender's mortgage insurance typically is required when borrowers having less 20% deposit. And it is a mortgage insurance which protects the lenders that when borrowers goes to default. But in saying that, like also you mentioned earlier that everyone can borrow or tap into by borrowing more than 80% of it. So essentially, when a borrower wants to buy an occupied property, they can go up to 95% LVR, meaning that they have low as 5% deposit, but the lender's mortgage insurance will apply though. So that's a typical transaction for a purchase owner occupied.
So why do banks and lenders offer more favourable policy for professionals like medical professionals or lawyers or accountants or doctors or engineers? They often get preferential rates. Why do lenders do that?
I suppose lenders are, in terms of the professions, they sort of understanding that, these professions tend to have relatively stable employment and a relatively high income level to support their home loan. And they also understand that they have been probably starting up for many years and to able to get that level. And maybe they're not able to accumulate as much as a deposit as they would like to. So that's the way of lenders or banks to incentivize them to get into the property market as soon as possible.
Yeah, and for a lot of professionals, and to the point is that high LVR lending is available to most Australians. It's maybe a little bit specific to what they do for a living, but what we're talking about here is the LMI waiver, where and the LMI, which is the lender's mortgage insurance, is payable by the borrower to insure the lender on the basis that you default on the home loan. So it allows you to borrow at 90% or 95%. I bought some stuff a decade ago at 90%, and it was a really good way to get into the market sooner. I had to pay the LMI component of it, which is an insurance policy. So what the LMI waiver is where lenders say, you're probably going to be good for this money. You're not going to default. So we'll waive that. And it's going to mean it's a lot that the borrower has to raise less of a deposit in order to enter the market. I think you spoke about doctors there and this notion that, doctors probably have quite a stable career ahead of them. And at some point in time, they probably should earn a lot of money, but they've probably got big debts from going to university for upwards of 7 or 8 years. So it's hard for them to pay back that debt and also get into the property market. So a really good way for lenders to probably get sticky clients, because I know medical professionals who use the bank and stay with that bank forever and ever. But, you probably see your refinancing stuff for professionals who are going, well, maybe the bank who I was loyal to for many years is no longer the right lender for me.
Indeed. Well, that's what you probably mentioned, like what lenders are looking at is stability of in terms of the professions. So in not only just medical professions, accountant, lawyers. So the stability is fairly like a stable, I suppose, and hence why they are willing to sacrifice on the lender's mortgage insurance, and in terms of as a protection for them, because they reckon, like you said, less chance of defaulting on the home loans. So that's probably the reason why, yes.
These professionals, doctors, lawyers, they've done a 5-year legal degree, or they've done a accounting degree, and they've done a CPA or a CA, or a medical professional who has many years. So they're deemed to be more trustworthy maybe than other people. So the banks are happy to help them out to get into the market. But let's have a chat about how you go about doing that, particularly from an investment point of view. We'll just go to a quick break. Stay with us, everyone. Back in a moment.
Are you stressed out not knowing where to find distressed, off-market, high cash flow properties in high-growth areas? What about the best strategy to build a wealth-generating portfolio? Look no further. Dragan Domovsky of Buyers Agency Australia can help. With over 20 years of experience as a property investor, Dragan is a qualified property investment advisor and expert buyer's agent, so he knows how to find the best deals and negotiate for his clients. Right now, he's offering a free 45-minute strategy session to get you started, normally worth $500. Text the code BAA along with your name and email address to 0405 105074. That's 0405 105074. And take advantage of this offer. Take control of your financial future today.
Welcome back. It's Phil Tarrant from the Smart Property Investment Show with Sharon Z. She's from Finni Mortgages, finni.com.au, that broking organisation which I've been using recently to get a whole bunch of home loans, who deal with me as a client. So if they can deal with me, I'm sure they can probably sort out most Aussies. I'm not the easiest borrower. But anyway, I'm happy to do that. This is a good business. I think so highly of it. I actually invested in it. So they're doing some good work. So we're talking about higher LVR borrowing. Yeah. Well, what are the negatives of borrowing at above 80% LVR, Sharon?
Look, a few bullet points, but obviously the one is, in terms of the negative is the interest rate will be relatively high because lenders' interest rate is tiered on the LVR band. So typically that if you borrow less than 80% with 20% deposit, for example, you have a better interest rate. When you tip into 80% LVR level, 80 to 90%, then you have a high interest rate. And then when going from the 90 to 95, then it will up another tier, then it will be slightly higher. So again, different lenders have a different interest rate band, and in say that doesn't apply to every lender, but that's just a general thumb rule. The other negativity is obviously that when you're looking at it to refinance and extract equity, then you will have to wait for your property equity to accumulate for a long time when it has that, have the 20% equity or plus to be able to extract. Otherwise, you will incur another LMI payable when you do the refinance. So that's the two.
That's the two, yeah. And this is this balance between, and it's, LMI for, I take the point around medical professionals, for example, who may be hamstrung with 80% lends because they've still got a lot of student debt and that impacts their borrowing capability. Therefore, lenders are happy to get them ahead. But the same thing applies to first-time buyers. And I know a lot of first-time buyers who have sat there and said, at best, we can raise a 10% deposit, but we want to live in this particular area and we can't afford the mortgage. We just can't get the deposit. Well, the borrowing at higher LVR can actually get you into the market faster. And I know a lot of people who have done the sums and have gone, well, I might need to pay multiple thousands of dollars or tens of thousands sometimes in LMI repayments. But the sooner they get into the market, the sooner they're able to get the benefits of positive upward market movements, should it be that way. So they offset very quickly as it's an opportunity upside, the cost of paying LMI versus being in a market which is going up. So they're growing the equity rate of their property much faster than the cost of the LMI. So this is an equation. This is a discussion that a lot of people have at that point in time. And I've usually found that when people just go, I want to get into the market, I'll pay the LMI, they've usually benefited from the upside rather than the downside. Yes. Do you see that very often?
Yeah, 100%. We spoke about the downside, but the upside is, look, obviously that there's a balance there. But what I do see the upside is where there is a lot more benefiting for the buyers. I mean, in terms of, you can get to the property market a lot quicker. Secondly, you don't need to have to save as much as a deposit as you would like to. The third is the opportunity cost, where, you potentially are able to get something where it has the potential capital gain instead of, like you say, for the money for the right property. So there are a lot of upside in terms of borrowing with the LMI on it. Yes. And in saying that, with the lender's mortgage insurance, we capitalize on it. And that's very often the way of like people how they repay the lender's mortgage insurance. So you don't actually need to come up with that particular cost upfront.
Yeah. And in terms of LMI waivers then,
Yep.
if professionals are able to get them, whether they're doctors, lawyers, accountants, engineers,
Yep.
etc., do they usually also get the benefits of the lower interest rate alongside that waiver, or they still get hit a higher interest rate because they are borrowing above 80%?
Yes, they will be benefiting from getting the rate same as 80%. Yes.
And there's a lot of tests. Like, how do banks work out? Do they just go, oh, they're a medical professional, they're an accountant, or they're a lawyer, and everyone gets it, or are they still discerning about who they'll give it to over other people? How do they make those assessments?
Well, when you're applying for a particular profession, you obviously advise is you engage with a financial specialist to work out your really objection and needs and to work out what is the most suitable lender. And if it turns out that, you'll be eligible for that particular profession and for the LMI waiver, and the most definite document that will be required is your qualification. If you're a medical professional doctor, you'll be registered with APRA, so that would a piece of the paper to prove your qualification. Yeah.
And if you're not a professional like a lawyer or accountant or a doctor, are you able to get a waiver on LMI? Do they look at other people, other professions, or small to medium business owners, and sometimes offer those waivers? Does that happen?
Well, I'm glad you asked that, because especially for first home buyers, as there is a government scheme out there, which is called a Home Guarantee Scheme. It has been running for a couple of years, and this year in particular, that from 1st of July, that has been extended to permanent residency as well. If you are first home buyers and you are a PR and citizens, there's a certain eligibility criteria to apply, of course, and with particular participating lenders. However, you are eligible for a LMI waiver.
Yeah, so you need to make sure you speak to your broker around whether or not, or number one, to actually understand whether high LVR lending works for you, and then number two, if there's any offsets or something around that. We'll just go another break. Stay with us. Back in a moment. Welcome back. It's Phil Tarrant from Smart Property Investment, Sharon Z, FinniMortgages.com. How long have you been with Finni.com? How long have you been with Finni now, Sharon? I know you've been broking and been in banking and finance for many years. How are you enjoying your time with the Finni crew?
Fantastic. I started Finni that just over 2 months now, but I enjoyed the moment, every moment. I love the team, every bit of it. And I actually learned a lot from each team member. So that's really inspiring for me as well. But for myself, I worked a boutique brokerage before I joined Finni. But in saying that, I worked in the financial sector for many, many years. Yeah, before I used to work for banks and a mortgage insurance myself as well. So
okay, so you got the inside knowledge. What do you most like about being a mortgage broker?
I suppose for me is I really like. I want to share my knowledge and experience with people and to guide them through, navigate whatever threat and the financial challenges, or buying a house or refinance, buying an investment, to extract equity, how to structure. It's just, for me, it's about sharing knowledge and experience and able to help them, hopefully, guide them through. As I suppose, it can be sometimes difficult or confusing for just normal everyone. Every lender has a different product and packages as policies. Yes, so it's about sharing knowledge and experience. That makes it exciting for me being a mortgage broker.
Any sort of have you done much work so far with Finni on high LVR lending with professionals and many deals in that regards?
So we typically, as said, we work with a lot of investors, and for investors, we can help to up to 90%. So in that sense, of course, we have to go through everyone's needs and objectives and their needs and requirements. But yes, we're able to or structure, extract equity from up to 90% and help them to looking for any potential investment opportunities in the future.
Yeah, and that's the key, right? It's always ask your mortgage broker whether or not, if you're borrowing at higher LVRs, whether or not you can get a waiver from LMI, and every bank is different. Is there any banks in particular who are more open to higher LVR lending than other banks? Anyone with any really good policies at the moment?
Well, in general, all the majors are quite, I would say, more relaxed with the high LVR. They do that very often. And second tier banks are normally okay, but they have some second tier banks have their lenders mortgage insurance sitting behind them, meaning that you have to go through 2 hoops of assessment or requirement that, you not only just need to satisfy the lender's policy, but you also need to satisfy the lender's mortgage insurance policy. But largely speaking, all the majors or most of the banks are quite open to high LVR lending. Yes.
And it's just really understanding whether or not you want to borrow at higher LVR levels. And we sort of spoke about the pros and cons around it. But I know a lot of people who are looking, they're in an accumulation phase for their property where they might have pretty reasonable income. However, sort of raising a deposit is a challenge. They know the benefits of moving decisively and buying in the right markets at the right time. And the high LVR borrowing can be worthwhile during those periods. You might not want to do it all your investing career, but to get cracking, get started and building a foundational portfolio. So how can people chat to Finni about high LVR borrowing or strategies around it, Sharon? What's the best way?
Oh, look, just get in contact with us by email and a phone number, which is all available on the Finni's website. Yes. so that's
the best way to do it. Yeah. No, nice one.
That's the best way.
No, that's cool. Well, you can find them at finni.com.au. Go and check it out. I think it's pretty easy to work out a time to chat with one of the brokers there. And, more questions or information around higher LVR borrowing, smartpropertyinvestment.com.au. We write a lot about it. I'll post this piece here from Sharon around higher LMI waivers for medical professionals. I don't know, a lot of medical professionals tune into this. It's funny when you start chatting with a doctor, how many doctors actually invest in property. There's lots of them, and I think they work hard, but they park their money in good assets in property. So to all those medical professionals out there doing that great work, keep up with it. But we'll post some more stuff online around it as well. That's Sharon Z. She's a broker over at Finni. You can find them finni.com.au. That's FINNI.com.au. Thanks for tuning in, everyone. Remember to check out smartpropertyinvestment.com.au, social media, Smart Property HQ. It's where you'll find us. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Do you need help planning your next event? With over 15 years of experience, Captivate Events is the expert in event planning. Our dedicated team ensures every detail is meticulously handled. Whether it's a gala dinner, exhibition, conference or study tour, we've got you covered. We'll be there every step of the way, from conceptualisation to flawless execution, to ensure your event is a seamless experience, minimising the time and stress involved in planning. Make your next event one to remember. Visit www.captivateevents.com.au or call 02 8866 2440 and find out how we can captivate your audience.